Hey everybody, Preston Brent here with our Trader User Group, a weekly roundup. This is for the trading week ending February 10th, 2017. What I've got on the screen here is the E-mini S&P 500 futures. I always lead off with this. I've got it on a daily chart. There's a lot of lines, technical lines on here as well. Let me just clean the screen up for a second and just kind of show you a couple of things. One thing that I did was, we're in what I call dry powder territory, which is essentially an area where once we get up there, we're at all-time highs. So where do we go from here? If we look at this, what I did was I just ran a Fibonacci extension off of a prior pivot high that was made back in May of 2015. It took us a long time to get off of that high. And as you can see here, as I draw this extension line, I think we set a record once we made that high to come back up and surpass that high again. So it's a key pivot high. And then the key pivot low was made February the 11th of 2016. And you could see where we had numerous attempts at this level and then, not quite down there before in 2015 rather. So it's a key pivot low. So what I did was I ran a Fibonacci extension from that to this, and it gave us these key pivot points right here on this weekly chart. And you can see on this weekly chart that, and again, each bar represents 1 week in time. We spent almost 3 weeks here, and then we had a breakout. We ran right up to that next level, and we literally sat there from essentially December through pretty much the end of January going into February, and now we're sitting at this next level right here. So these Fibonacci extensions or retracements, whichever one the chart calls for, generally shows you areas where the human tendency and the market tendency is to take profits or to come in and buy, whether it's a support point or a resistance point for taking profits, support point for buyers to come in. And we use these to kind of see, because we've never been up in this area before, it's dry powder. Now, once we've come up here, you can see where the next hurdle is, which is around 2341.85. So let's call it 2340 or 42 rather, as another area of running into resistance. On the upside. So I wanted to just show you, and then if we just take it on up to the next level, it's 200% and then 2.31%. But generally, those that are most widely followed are these right here. Okay, you've got a 61% extension, a 50%, 38 roughly, and a 24% extension. And these are probably where we're going to hold out for a while here. But we have been moving up, and then we consolidate, and then we move up and we consolidate. The other thing that I will show you on this chart here is that on this weekly chart, there is absolutely no bearish divergence at all. It's non-existent. And as my members know, we follow this very closely. There's a number of different ways to measure divergences, but you can see from that pivot high to this pivot high here, no divergence. So what does that mean? That means that any pullback is probably going to be met by buyers happily coming in and buying the stock or equity or future, driving it back higher again, testing the highs again. And that's pretty much where we've been. You can also see on this chart here, and I could do a relatively wide channel, right? I could just draw these bottoms like this and draw these tops like this. And you could see since February the 11th, we had a nice move higher, and we've just, any drawback has been bought dramatically. So, and we've, again, it takes 2 pivot points to make a trend line. I don't like to use just 2. I'd like to see 3 or more. It pretty much clarifies and defines a trend line a little bit better. You can see clearly on the upside, we've got a pretty good strong upside trend line here that, you know, would probably take us up to this area here. So the momentum can carry us higher. So I do believe the momentum is in the market's favor. But I also believe that we're starting to see a lot of potential risk, existential risk in the market, whether it's the political upcoming elections in Europe, any one of which that could set the euro to the downside, dollar to the upside. We got the political risk with Donald Trump and his administration. The markets clearly love the potential, the coming tax policies, less regulation, infrastructure spending, all of these things. But a lot of this move here, and let's go back to the daily chart, a lot of this move here that we've seen off the markets is basically off of the idea that he's going to do what he says he's going to do. That was the night of the election. And you can see that we've just put in this huge, massive move up. And I will remind you that at that low right there, which is around 2028, back on November the 8th in the evening in the futures market in 2016, that put the markets in the red for the year. And then only after that did we have, I mean, we literally went into close right there, and then all that's overnight action, and then when it opened the next day, we were higher. So now our members, we were up at 2 o'clock in the morning trading this in our chat room. It was a lot of fun. We made some good money in that trade. But you can see where we're sitting here right now, and now we've had this break up and we're moving to the upside. The other thing that I will show you here is all of this move is basically based on the coming legislation and the administrative and fiscal policies of the Trump administration. You can see here that the other thing that's very positive, the 200 EMA's got a huge upward vector. The 50 EMA's got a huge upward vector. The 4 EMA, the 12 EMA, I mean, it is just going straight up like this. So, and you can see down here, we've got this consolidation pattern forming in the MACD above the 0 line, which does suggest momentum wants to carry us up to this 618 extension off prior key pivot highs and lows. So, you know, call it around 2340 to 2350 area seems to be a favorite resting spot for the markets, and then we're going to rest or maybe have some little bit more of a pullback. The other thing is, and we had talked about this before, we were in this tight pattern like this for quite some time, and then we broke out of it, and then we just moved. When we broke out right here, we came back in, and then we broke out again. We've gone, I think Barron's is saying about 85 days, 85 trading days without a 1% drop to the downside. We've only had, the last instance I think was in 2006, and then the instance before that was in the 90s. So this is only the third time that this has happened in quite some time, in you know, 2 or 3 decades. I mean, just really amazing. And again, there is no bearish divergence on that move from this point here to this point here, so that did suggest that any downside action like that is going to be bought, right? And now we're in a resting state again. So I think we're a little bit overinflated. I think a little bit of sideways action again. Remember, this past week the markets were pretty much steady state until Trump came in and announced that we've got, I don't know what his exact words were, but his words were essentially a huge tax plan coming. So you can see on this 2-hour chart here just the length of time that the markets move up, and like that pattern right there went from about the 7th to the 23rd of January, long period of time, right? And then we finally had this expanded move up, and then we came right back dab into the center of this pattern again, right? and then if I were to extend it like that over, then we tried to get up above, we couldn't, and then boom, we took off. We came back up. It looked like we were going to do a retest, but then Trump in the middle of the week came out with his huge tax plan that said it's going to be released in 3 weeks, and then poof, there we went, right like that. So we broke out above the 2302 area, which is the 50% fib extension off the prior pivot high and pivot low. So again, that is a key area there around the 2300. So now this is kind of where we're sitting, guys. I do believe that if they do come out with this fiscal tax policy, now remember, this is going to be Trump's proposal. This is not going to be what is going to actually happen. He's going to put that proposal on the table, and then it's going to be up to the Congress and Senate to eat away at the edges and do what they need to do to get something approved. So that's enough to continue to move the markets higher until they see something is going to falter. But this is kind of where we're sitting. Now, this coming week, we've got Aunt B, that's AKA Janet Yellen, coming out on Tuesday in front of the Senate and Wednesday in front of the Congress, the Senate Banking Committee. She does this 2 times a year, and the House Financial Committee on Wednesday. And she's going to talk about the state of the economy. And most analysts believe she's going to not say anything different. They're still committed to 3 rate hikes for 2017 this year. I'll remind you that the markets have only forecasted 2 rate hikes for this year. And she's going to throw in a lot of, 3 rate hikes, but the markets are uncertain. We stand ready, blah, blah, blah. So you'll be able to read between the lines of what she says and come away with absolutely nothing. That's kind of how she talks. So let's see what she does. I believe she's going to put her recipe for blueberry pie out there in front of the Senate and to the congressmen, and let's see if they like it or they find it a little bit bittersweet, or let's see if the markets find it sweet or bittersweet. But that's kind of where we're sitting right now. If I come back to the daily chart and put all of my indicators back on the screen, you'll see I've got the key levels established here, the key price zones established, the 2017 open price at 2240. We're sitting now at all-time highs at 2315. You can see this volume over price. There is a lot of volume supporting any little pullback down to this area right there, right? That's a lot of volume sitting around 2260 area, which is also near a Fibonacci 3/8 extension off the key pivot highs. So I think this, if we do get a pullback, that'll serve as a support point. I mean, after all, we just spent such a long time in that area. I mean, literally from the middle of December all the way through to the middle of January, over a month, a little bit more than a month, before we finally broke out. And then we came back down. It found support. We broke out and we took out the prior pivot high. So generally when you do that, we come down, we test the highs again, and then if it falls back in here, we're back into this soup again until we get more expectations out of the Trump administration. All right, and if you notice, I didn't say much about earnings, but earnings are looking good. We're more than half of the way through the Q4 earnings. Earnings per share are up, 6-7% area. Revenue is also up. And the forward guidance doesn't look that bad. So the markets are primed. And if the Trump policies get through, then we could see a nice little run up to some of these other levels here in the Fibonacci extensions, 2468 up to the 2500 area. But I do believe, and I'm still sticking, I'm on record as saying that in the next year to year and a half or so, and I've been saying this now for 6 months. I guess eventually I'm going to have to be right? But I do believe, and you never can pick it, but I do believe that we're in for a 25 to 40% pullback. There's a lot of existential risk out there, primarily, I believe, coming from China and their debt and their capital flight. For our members, I'll go through that in detail on Sunday night, and then we'll look at our secret trader. We're doing well this year in our trades for secret traders, so check us out if you haven't already. So this is a little bit about where I'm looking at now for the S&P 500. Now if we look at the leader of the pack, which is NASDAQ. NASDAQ actually was the worst performer on Friday, if you call it that, but it's still at all-time highs. You can see here we made all-time highs on Friday, the 10th, at 52.3250 for the NASDAQ 100 futures. You can see the dot-com bubble era high right here, that green dashed line. I just leave that in there because we made that back in 2000, and it literally took us a long time. If we go back to a weekly chart just to show you guys and look at that, you can see that if we go back to the dot-com bubble highs, literally that was made back in 2000, and we finally broke above that in 2016. So 16 years to take out the dot-com bubble high, and you could see the trajectory and the steam here. Keep in mind that markets don't go up forever and they don't fall forever. We're starting in the NASDAQ to get a little bit, I think, of overextension here. You can see it's like a space shuttle. And again, this is a weekly chart here, but you can see this tight correlated channel that we were in, really starting off the lows in 2009, and we started to move above the channel around 2014. So after being on this upstroke for 5 years, the vector of the inclination has increased. When I talk about vector, I talk about, well, that is the general upslope right there. But now at this point right there, it's the angle of ascent has actually increased. If you were to draw a flat line and measure the angle, or draw a flat line and measure the angle, you would see this one here is much wider than this one here. Folks, generally when we make tops, the topping action in a market is generally formed like that. When we go up, then all of a sudden the ascent gets steeper and steeper until we just kind of peter out, and then we have a violent move down and a violent move up, and that second move up we don't take out that, and then we come down, and then slowly we start making lower lows and we formed a top. Topping actions can be very messy, and they can take a lot longer than you think. And one of the things is, and I heard it said before, and it's so true, the markets have a great way to measure fear. Fear is generally measured by the index VIX, right? Volatility. So when the market is going down, the VIX is going up, right? As the market goes down like this, then the VIX, which measures volatility, goes up, or the VIX futures goes up. So that's our measure of fear. But what's our measure of greed when the market gets up here? Well, we take some sentiment indicators, like the degree of bullishness versus bearishness by the Association of Investors, Individual Investor Association, or by other analysts. And when you get a sentiment index where just about everybody is bullish, or a very low measure of the put-call ratio, meaning there's not as many puts out there, then that is some measure of greed that says everybody is on the long side. And when that happens, I can just tell you from experience that the markets generally pull back and take some of the weaker hands out. So this is the strongest index right now, and then of course the weakest index is the Russell. That's small cap and mid cap. And if you can see here from this trend line off of 2009, we only broke it one time right here, and then we moved back up. But if you look at this, and let's take it to a daily chart, we're making new highs in everything in 2017. I mean, we're making new highs. If you look at this though, we haven't made new highs in the Russell futures in 2017. Here's the 2017 high, but you can see the 2016 high was made in the second week of December. So the Russell is the only chart that's kind of fallen behind, which is small cap and mid cap. Now, clearly the 50 EMA is providing support for this thing as it moves up. And again, like the other charts, we got an upward sloping vector on the 50 and the 200 EMA. So this would suggest momentum is going to take out that 2016 high and now we're in 2017 highs. So now all indexes are at new highs in 2017. This long rounded bottom here and down here, it's a consolidation, and as we move back up over the zero line, that would suggest the Russell is going to also move higher as well. So remember, the Russell, by the way, was leading the way out of the Trump inauguration or out of the Trump election. You can see here off the lows, there's the 2016 open price. So you can see the Russell also down here was in the red for the year on that night. And then boom, it went straight up. Came down and then straight up, and then by December the 12th it had far surpassed all other indexes. In fact, it made its all-time highs, and then we've just been tracking pretty much sideways. You could probably also take this pattern on the Russell and do a little bit of a like that, you know, a little bit of a bull flag. I didn't draw it exactly straight, but then you can see we're breaking out here. So it would suggest a breakout of taking out the 2016 highs, which will now give us new 2017 highs, and then a little bit of a retest, but that's kind of where we're sitting here. So we got room to go higher, guys. Understand that. And then, of course, if we look at volatility, it's kind of like the Alfred E. Neumann, what, me worry kind of thing. If we look at the VIX, and how the VIX finished up on Friday, it's at 1085. I mean, extremely low, right? You can see the low for 2017 was right here on January 27th at 1030. That was the low for this year in the VIX, and we're down here at the lows. Understand, I call this zone 1, roughly anything, I guess the best way to say it would be anything below 15 VIX is the zone 1. And this just kind of helps with certain option strategies that we want to do. I mean, you should know them intuitively, but it just gives you a general idea of kind of like a red flag, yellow flag, early warning condition here. So anything that we get down here, it does suggest volatility can move higher, which would suggest the markets will move lower. And then we've got a lot of interesting things happening in the bond market. If we look at the bonds, it was relatively flat on Friday. We're kind of sitting here. Bonds actually, since the middle of December of last year, have been moving up. I mean, up, normal pullback, up. We haven't taken out that pivot high, but we made a pivot low, which is higher than the previous pivot low. So these are going to be kind of the areas that we want to watch, right there and right there. If we break here, then we're going to be getting a little bit more of a pullback in the markets, a little bit of a flight to safety kind of thing. If we break here, we're going to come down to my target, which was around 145. That was the target I was calling for in the bond market. And then, of course, the dollar. Everybody believes the dollar is stronger with the Trump administration, but if you look at this regression line, it's got about a 92% correlation. It's just been this tight movement down, but now we finally broke above or outside of this regression channel, and we're just sitting just slightly above the 50 EMA. If we can hold this area here, I believe it's just going to give us a wider, longer Elliott wave 3, 4, 5 pattern. There's a 3 and a 4, and a 5 would suggest up at that key price level that was a prior key price level. So that would be the suggestion of the movement right there. You can see that elongated rounding bottom of the MACD, which suggests that the prices have pretty much reached their nadir, I guess, or their low point before they start to move higher. We'll watch the bonds and the dollar very closely. The other one that's been interesting for us is gold. We got long gold. Well, we've been trading gold most of this year successfully in our secret trader room. And we've taken on some additional trades that support my thesis that gold is going to be higher this year than where it started the year. And you can see it started the year right down in this area here, and boom, here we are up here. We had the test of the 200 EMA right there, and we failed. We had it there, and then we finally broke out. And then, as I said, with that breakout, boom, we came down and we did a test, and now we're sitting right here. So if we can hold that and then take out that key pivot high, we're going to come up to some of these key pivot levels up there, eventually up to 1300 right in that area there. So, but gold is at a precarious position right now, especially given where the dollar is in the bond market. Generally, gold and bonds kind of follow each other. The charts look very similar. And the yen follows the bond market and gold. So let's watch this very, very closely. The one metal that we haven't looked at, but it's just been very strong, is copper. We had this attempted breakout right here. We had this pullback on copper. We had the long trending area, and then boom, we broke out. Then we had a trending right in this area here, and then we had another breakout right here. So I think copper could have some room to run higher. We've got the cross in the MACD above the zero line pointing up. That was a huge move in copper on Friday. It may give some of it back, which may give people a chance to go back long again in the copper futures market. Or if you don't trade the copper futures market, maybe JJC, which is an ETF that follows copper. You can clearly see the breakout right here. I think that can have some room to run. The other one, which is Freeport-McMoRan, you can see here, it did just the opposite. All right, it actually came back down here. If it finds support at the 50 EMA, that'd be a good buy point for Freeport. Oil is moving up. The Energy Association, the IEA, International Energy Association, came out with their reading and said that so far, through the first month anyway, OPEC is holding up on their production cut status. But the funny thing is the U.S. markets are not. They're increasing rig count. Oil's moving higher. The 50 EMA, this red line, you can see here where it's held up very nicely, right, in this area here. So from our perspective, we've been trading oil very successfully this year, but not bullish or bearish. We've been trading short strangles in the oil futures market. You can see those in our secret trader room. We've been doing very well in the oil market. Also gasoline, we've said it would probably move higher, and sure enough, we're in the seasonal period here from this downtrend where we've had this exact same pattern that you're seeing in a couple of other commodity markets, where, you know, we just kind of had that low there, and then boom, we shifted right up above. We may have some settling in here, but I do believe gasoline is going to come back up. The high price for gasoline in 2017 was made on the very first day, trading day of 2017, and then we've just traded off since. But the seasonality of gasoline futures is very strong in February, March, and April. So that should be on your watch list. How do you trade it? Well, you trade it with UGA. It's an ETF that tracks gasoline. You can see this move off the 200 EMA right here. So that's something that we're watching. And then, of course, we're in the ag market. We're successful in the ag market. We're waiting meats, I think, can go lower. OJ, I believe that can go lower. You can see right here, this correlation of this regression channel is at 96.9, which is just unbelievable. A very tight correlation, which just means it's just a tighter regression channel. It failed at the 200 here. Let's see if it looks like it's failing here, which means it could go lower. So we're playing it that way. Sugar is another one on this upward bent here, but there's just a lot of overhead resistance here. If sugar breaks down below the 50 EMA right here, and it's held it up. I mean, it's just really been a very strong technical support area. If that breaks, folks, we're coming down here lickety split. All right, that's going to be a good move. And you can see there's a little bit of a divergence here from that high here to that high there. It triggered a day or so ago. That does suggest that we're going to expect some more pullback in the sugar market. And then finally, cocoa. We're watching cocoa. It's at all-time lows. I mean, really low. We have to go out to a weekly chart in the cocoa market and really pull it back like this to just see. And this goes back to 2011. And if we really take it back, you can see not since back around the 2004, 2005 area have we been down in this area. So can we go lower? Sure. I do believe, I know a lot of people are trying to jump on the long cocoa bandwagon right now. I would wait. That's not the pattern that we want to see. If we go back to where we were right here, when people were thinking about going long cocoa, you can see from that low there and that low there, we did not have any bullish divergence. But then we made up, you know, the typical let's cover all the shorts kind of thing and run the shorts because everybody's short. It moved up and then it came down and tested the low, but then it gave us that bullish divergence. This area here would have been a higher probability move to the upside. Even though we went up pretty good over here, we got the move, but not quite enough. We came down and then finally we got the battle to move higher. So you can see how choppy it can get as cocoa makes its decision on what it wants to do. So now let's fast forward to today, the same thing. We're just now hitting this area here, so we could move it out like this and find that we come down even down to this area here. There is no bullish divergence. So from our membership group, and we do a lot of futures trades, and we're very successful in them, the way we do them. So I'm going to be waiting on cocoa. We may wait 2 months, 3 months, 6 months, or a year, but there'll be a good trade coming in cocoa. Right now, this is just a day trader's dream. Just take short-term trades, trading a tick chart or a 2 or 3 minute chart. That's not what we're about. I'm not looking to pick up pennies. I want to make a little bit more than that on these trades. So anyway, guys, that's kind of where we're sitting right now. Members, I will see you Sunday night. If you're not a member, I highly encourage you to come in and check us out. The Trader User Group combo package is probably what you want. It covers all of this plus our secret trader room so you can get in on our trades for this year. It's going to be a really interesting year. Have a really great weekend, everybody. I'll see you next weekend, so don't forget Valentine's Day is coming up on Tuesday, so buy your loved one a lot of sweets and candy and take them out and have a good night. Have a good one, everybody. See you in another week. Ciao.